Hello, welcome once again to another video podcast. And my name is Seewing from the Year Real Estate Network, and today I'm going to talk about Southwest Florida, Cape Coral, Florida, which is located in Lee County, which consists of Fort Myers and few surrounding smaller cities. Then I'm going to segue into Charlotte County, which is around 30 minutes above Cape Coral. Charlotte County consists of Port Charlotte, North Point, and few other surrounding cities and submarkets in those areas. So Southwest Florida is a pretty large region. It consists of almost 1 million people in population. So I'm going to share with you, using the Redfin data, what's going on in the housing market. And when you finish with this video, if you see value on this video, please click the like button to enhance my YouTube channel, and also subscribe to my YouTube channel so you can receive weekly updates on the housing markets throughout the country, throughout the various metros. And also, you can also want to subscribe to my website to become our free member of our real estate investment community. You can submit your email into our website at the bottom, so you can receive weekly email newsletters on free real estate education and investment opportunities in the best markets in the country for real estate investors. All right, so without further ado, let me dive in and share my screen. And I'm going to start off by going over the Lee County Metro, Southwest Florida, which is one of the fastest growing markets in the country. In case you have not heard, Lee County consists of Cape Coral, Fort Myers, and few other surrounding cities. So it's a very fast growing. So let's take a deep dive on all the Redfin data. So without further ado, let's go over new listings in Lee County. New listings, as you can see, the blue color is 2019 trends. And then the red color is 2020, and the orange color is 2021 year, and the black marker represent this year, 2022. So without further ado, let's go over the new listings in Lee County. New listings, there are 362 listings in this past month from August to September the 18th, 2022. And there is a 28% decrease in listings year over year from 2022 from 2021. As you may or may not know, in the past few years during the pandemic, this region of Southwest Florida has gone through some skyrocketing growth, high level appreciation, etc. Okay, and then so these trends in new listings indicate that there's a lack of inventory to sell, or either potential new sellers are not putting their home in the market, given the much higher interest rate today at a little bit over 6% for owner-occupied buyers. So yeah, this is a trend which I see has been decreasing since March of this year. So for the past 6 months or so, we have seen decreasing in home listings, new listings. So this is a trend which will, if this trend will continue, the inventory supply of homes will be very low. And so who knows what's going to happen, right? And you match up with the currently the moderate demand, the decreases in demand. So we're seeing some very interesting trends. So let's go over the active listings. The active listings shows the entire trend for the whole year. And in the Lee County, Cape Coral region, as I said, active listings year over year is 4,400 listings actively. It has increased by 44% from last year, 2021. Last year, the supply of inventory very, very low. There's a lot of multiple offers, a lot of bidding wars that occur in this region of Florida for the past few years, as a matter of fact, that causing tremendous growth in this market due to job growth, population growth, migration patterns from out of state. All those things are coming together in this very hot Florida market, right? So yeah, active listings are not increasing. As you can see, is level off. It did increase a few months ago, April. However, we've seen some trends of leveling off. Once again, sellers are not selling or not putting the house in the market that require a good balanced market. So it's still very much a seller's market, but not a buyer's market. And we'll discuss more about that a little bit later. And then pending sales, right? That's very important. Pending sales are, well, I predict would be, I did not review this data in advance of this video. So I suspect pending sales will be lower, which is the case, very lower. Back at the height of this past February and March, the pending sales are fairly high at 531 transactions. Then it has gone down tremendously. This is insane, month over month. And then right now in September, the 18th, there are only 242 accepted offers by the buyer from the seller, and which is at 242 transactions, which is 43% reduction year over year from 2021. You see this very important trend. There are less and less inventory coming into the market in this region, which will cause a very high supply shortage if these trends continue. So this is something to monitor. And then now let's look over the new listing median price, which is very important from a high level for the past 3 years or so before the pandemic. Let's see the level of price increases year over year. And let's start with the blue line, which is 2019. The median price a mere 3 years ago was only $250,000. Okay, then let's fast forward pre-pandemic into when the pandemic began in 2020. It has from 250K median price in Lee County to 279,000, which is an 11% appreciation rate year over year from 2019 to 2020. Then you see the tremendous skyrocketing uptick from 2020 to 2021, year over year increase or another 24% in price increase in appreciation to 347,000. Then from 2021, 347 from 2021 into 2022, September, another 23% appreciation, and the new median price at 429. This is mind-boggling. From 3 years ago, before the pandemic, median price of 244K now is at 429. What's the percentage increase? Let's do the calculation. Very simple. 23% this past year, another 25%. So 23 plus 25 from 2019 to 2020, what is it? 48%. Then 13% year over year, 48% plus 13, like more than 60% appreciation over the past 3 years from 2019 to 2022. And the trend is upticking. You see the trend, right? And it went at the peak around March, and May went down a little bit with the new listing price a few months ago. Now it peaked from August until September. The price has peaked from 404 to the new level 429. So this is very, very interesting. So now you see the fast growth in this market, and there's still some growth. And then let me show you the last piece of important information before we will segue into Charlotte County, the month of supply. The month of supply means anywhere from 5 to 6 months supply of inventory is a balanced market. All right, anything less than a 5 to 6 months supply of inventory is a seller's market, and there will be a shortage of inventory versus whatever demand exists at a particular point in time. So month of supply, let's go over. The month of supply right here is kind of hard to see. The black line 2022, September 18th, is 13 weeks. Divide 4 weeks into 13 weeks around a little bit over 3 months supply of inventory in this market in Lee County, Florida. So what do you think? So I'm sure you agree it is still a very much a seller's market, although the buyers have some concessions, especially when you work with a builder. The builders they need to get rid of the inventory even in this region. So you may get some bargain prices, some incentive, some slight reduction of the new construction homes. That is a possible. But resellers, the people that want to sell the homes, you're going to have a hard time finding those inventory. Okay, so all the trends indicate that this market, the Lee County, with the fast, the tremendous migration, doing the remote work of people coming from the Northeast, renters and home buyers, and the people from all over the country, really from California even, coming in this Southwest Florida, Lee County, Cape Coral, Fort Myers region, because there's a low affordability, there's no state income tax, rising home prices, a lot of good jobs, tremendous job growth, tremendous population growth, retirees, second home buyers, real estate investors are buying investment homes here, and primary homeowners are trying to move in. So there's a supply inventory shortage, and there's a lot of renters are moving in this area. There's bidding war for renters because there's not enough homes to rent, therefore causing skyrocketing of rents. So you, as a real estate investor, potentially, mom and pop real estate investors, if you want to buy a cash flow homes, if you want to buy a cash flow home, the best scenario would be although the median price is already $395,000, right? Median price, but if you can find a home in the suburban area within this county, like Lehigh Acres or LaBelle, or somewhere moving inland, because Cape Coral by the ocean are getting to be too pricey for real estate investors. The numbers does not work. Cash flow. So you buy a little bit inland toward the eastern side of the Lee County, Lehigh Acres and LaBelle, you might be able to find a single family home for $300,000. Single family home new construction. If you could rent for $2,000 to $2,200, if you put 25% down payment, even at an investor mortgage rate of 7% these days, you can still achieve a little bit of break even to a very slight positive cash flow. That should meet expectation moving forward. So you could enjoy a little bit of cash flow, but what you get is potential systematic appreciation potential. You have a renter pay down your mortgage. You lock in the 30-year fixed rate mortgage. You can always refinance in the future if the rate comes down, so you can have more cash flow. So investor, there's still an opportunity to buy, and the numbers make sense in terms of cash flow moving forward for the long term. So that's what's happening. All right, and so that concludes Lee County. So let's go over to Charlotte County, which is around 30 to 45 minutes north of Lee County, Cape Coral. Charlotte County consists of Port Charlotte, North Point, and a few other sub-market cities located around this area. Is also very, very fast growing. It's a path of growth into the suburbs. So let's go over what's happening in the Charlotte County. Very, very fast growing. The prices move very, very quickly. So let's start with the same metrics. The new listing, once again, the new listings back in April of this year, it has about 210 transactions, which is 20% year over year from last year, 2021, as you can see here. But as you can see, since April, the new listing has dropped pretty steeply, and all the way down the trend line to around a mere 138 transactions, which is 13% less transaction of new listings year over year from 2021. So this means, once again, similar to Lee County, there's a lack of supply inventory of homes from the new builders and from sellers. Sellers are locking at that rate. 40% of the sellers' mortgages are free and clear, and the remaining 6% of the sellers that have mortgages nowadays, they're locked in at lower than 4% 30-year fixed rate. So the sellers these days, because of a higher interest rate right now, 6.5%, the last time I checked this week. So sellers have very little incentive to sell or and little motivation to sell their homes, whereby when they buy a new home, they're going to pay a double the interest rate, the mortgage payment, and at also potentially a higher price. So they are sitting on their more houses. They're gonna stay put, sellers. So any kind of buyers, the buyers' demand has subsided. Obviously, we know at 6% mortgage rate, so that price out a lot of potential home buyers. So this is a very, very interesting market. So new listings, and let's go over the active listings from the big picture in this Charlotte County, very fast growing, as you see right here. The active listings at the beginning, they're trending toward more and more active listings from the early part of this year, but now it has leveled off. It's leveled off right now. The active listings are only like 1,470 transactions, which is, even though it's 65% higher from 2021. As you can see, 2021, the active listings are very, very low, therefore creating multiple offers, bidding wars, and with skyrocketing housing prices. That's no longer happening right now. The buyers have more of a negotiation power, not that much more, and I will share with you then. So active listings not going up, so the level of the inventory potentially and the potential sales of transactions are expected to be lower. So with that in mind, I'm going to go over pending sales, right? Pending sales should be, I'm doing it for the first time, pending sales should be decreasing, all right? And that's my projection, which is the case. Pending sales, which is buyers accepting to say the seller's offer, and they going through the closing of escrow transaction, which is at the peak of this year, March 2022, there were 164 transactions pending, which is almost 6% year-over-year increase from 2021. Then, however, since March, and then for the past 5 or 6 months until September 2022, the pending transaction is only 102 transactions, which is almost 23% less pending sales year-over-year from 2021. So we are seeing some very, very tremendous lack of inventory. So we're talking, low supply, moderate demand based on the higher interest rate right now. So we have to look over this. And what else we need to go over? Let's go over the median sales price for the past 3 years and let you know how this market in Charlotte County, Port Charlotte, and Northport and few surrounding sub-cities in this metro, in this region, how much it has grown. From 2019 before the pandemic, the median price for a home in this location is only $213,000. And then you fast forward into 2020, it has increased 11% appreciation from 234, and then from 20 to 2021, skyrocketing growth, 31% appreciation, and the median price in 2021 is 317. Then from 2021 to 2022, another 19% appreciation increase, and the new median price in this county is 377,000. We're talking 2019, 211,000. Only 3 years ago, 211K median price, all the way to 377K. So the question is, would there be a correction bubble or correction? Probably not, based on my trends that I'm seeing. Okay, and let me see what else. So let's look at the month of supply. Month of supply, which is 4 to 6 months, is a balanced market, right? Whereas the buyer or the seller does not have a distinct advantage. Now, the weeks of supply is 13.6 divided by 4 weeks per month each month. 4 times 3 is 12. We have a little bit more than 3 months supply of inventory. It's still clearly a seller's market, although the buyers have some negotiation power because the days of multiple offers and bidding wars for housing purchases are over. All right. So based on these trends in the Charlotte County, the path of growth, I have not seen any kind of dips. Okay, let's look at the price drops. Okay, from initial listings. Okay, at the price drops are very minimal toward the beginning of this year. There was some very high elevation of price drops by the seller. The percent of active listings with price drop was almost 9% back in July, which is we're talking almost if you quantify into a monthly price drops projection in the past, we're talking almost 40% of new listings need to drop their prices based on decreased demand as a result of the higher interest rate. But then from July all the way to September, from July to all the way here, the price drops have decreased to 7% of price drops. And then for some strange reason from August, the beginning of August, all the way to currently September 18th, there's a percent of active listings with price drops is 8%. So it's still kind of confusing here. But again, once the sellers understand that demand is not as high, the potential seller, I predict for the rest of this year and beyond, they're going to list their prices according to market demand. So they're not going to overlist their price, try to get some multiple offers. So I see this trend line to be balancing out or even decrease moving forward. So that's not a big concern around that. One more thing I might want to say, average sale to list ratio. I might want to go through this just for a quick second. The average sale to list price is 97%. This means typical sales transaction lately, you see the big trend in that the sellers have to selling their home at 3% less than their final list price. So to a certain perspective, the buyer have some kind of power. They have more negotiation power to reduce the final offering price from the final list price by the seller. So the big picture, just so you know, the trends are very positive to me. I mean, do you see any kind of correction or big market drop? Real estate, as you know by now, is local. There's no such thing as national real estate. Every market is local market. It's down to the city, down to the neighborhood, down to the block of that particular neighborhood. So if you can target a specific neighborhood to purchase your primary home, to purchase your investment home, that is the key to success for buyers. So I'm talking to behalf of risk investors. Given the positive trend, I don't see any crash, bubble, maybe a slight correction in some neighborhoods in Charlotte County. But based on I understand this market for the past 20 years. I've been helping investors, out-of-state investors from California and many other places to buy cash flow homes with the lowest price point, the best with the highest rent. So giving the median price in the Charlotte County, Port Charlotte, and Northport and a few other sub-cities in this region, the median price is $419. As a risk investor from out of state, whatever you want to buy cash flow properties, I highly suggest you to find a price point of around $300,000, single family home, preferably new build. And if you could find a renter that you can rent it out to around $2,000, $2,100 to $2,200, even with a 7% investment mortgage rate. As you know, investment loan rate is higher than the owner-occupied loan rate, which is currently, as we speak, on the third week of September right now, based on the Federal Reserve hiking the rate again to another maybe around 6.3% for owner-occupied investors. You have to pay around 7% or slightly higher if you use a conventional rate, or if you want to do a rate buy down from the new builders incentive in this market, you might get a lower interest rate than 7%. Or if you want to use the 40-year mortgage with a 10 years interest only for investors, you could have a lower payment on your mortgages and then your cash flow could be better. So cash flow wise, at 25% down payment, even with 7% down payment interest rate for risk investors, this is a good market to purchase for long-term buy and hold. And in the future, but very important, if and when the interest rate goes down in the next few years, who knows, you can always refinance your mortgage. Besides, your renter, because there are plenty of renters, there are skyrocketing rentals going on in Florida. In case you have not heard, 20, 30, 40% rental increases, and people cannot afford to buy their own homes. They are renting. We're seeing a historic renters nation. So landlords, investors like yourself, whether you are from out of state, in particular from California, this is a great timing to move into suburban Lee County, into the suburb, the path of growth. Take Coral suburbs and the Fort Myers suburbs and LaBelle and Charlotte County, Port Charlotte and North Point, Lehigh Acres, these areas. It's the suburban path of growth. You will see affordable prices. You buy in a good neighborhood, rent it out, plenty of tenants. There are bidding war by renters. What's going on in these two counties, believe it or not. So we're seeing great job growth in this region of Southwest Florida. Ethnic migration of people from out of state, from Northeast and from the West and from the Midwest coming into great sunshine. Number one, fastest growing Florida. And you come to this region, Southwest Florida, where the price is still relatively affordable, even for investors. The numbers make sense. The yield, the cap rate makes sense. So this is so you need to, just focus on your goal and just bypass all those doom and gloom and all those negative information out there. Focus on your action plan for risk investors, buy cash flow homes in the great areas in this region. So with that said, thank you so much for listening. And if you see value from this video, please click the like button and click subscribe to my channel. And also, better yet, to input your email into my website at the bottom, so you can receive free newsletters about real estate investment opportunities out of state, cash flow turnkey properties with 25% down in the best turnkey markets in the country, mainly in the South and Southeast. Thank you so much. This is Seewing from the Real Estate Network. Have a nice day. Bye-bye.